Hey, welcome to the Closing Beat, everybody. Happy Wednesday to you. Already, it's Wednesday already, almost the end of the month as well. We've got 2 days left at the end of the month, and we're going to talk about some of that good stuff today with you here. We're one of the only advisors that can talk about the stock market. You notice how none of them ever talk about it or give you anything new. Hopefully, you'll check us out at jazzwealth.com, the only tariff-free advisor in all of America. In fact, you can go to our website and see exactly what it takes to work with us if you'd like, and we don't pick. We don't care if you have a little bit of money and you're just getting started, or you got a lot of money and you look for some complex financial planning. Jazzwealth.com. Also, good news. Tomorrow night, I'll be getting a haircut, right? I know everybody was asking, right? So just letting you know, I'll be getting that done. Finally. Anyways, let's talk about it here. So Fed Day. Happy Fed Day, everybody. How's it going? Excuse me. We've got the S&P on the screen here, and Mr. Jerome Powell actually bucks the trend just a little bit. We'll cover that in a second. The S&P down ever so slightly. Basically just like 0.33%, not too much to report there. We're in a tell me more kind of a zone, right? So we broke through this downtrend here. Everything's fine. A little bit of sloppiness as we've come through those couple days. And now the market's looking for something. Give me something. Show me that NVIDIA still has that purchasing power or that's worth that much money. Show me that I should be paying up for the stock market, which is incredibly overvalued. We're going to talk about that as well. So a little bit of kind of holding tight, waiting and seeing. We got the Fed out of the way. All that's fine. Left rates unchanged. You don't need me to harp on that for you guys. You know what's happened. We're actually going to talk about going forward, what that looks like, show a different data point that maybe you've never seen. The NASDAQ also just slightly higher, or no, it was down. It was flat on the day, basically. Not too much to report there. You've got earnings after hours from a handful of stocks we'll cover in a second. The Dow actually sitting near highs, looking the best out of all the major indices, and the Russell 2000 still trying to figure out what rates are going to do. Rates did actually go a little bit higher today, ever so slightly, and they remain at least off of their lows. So that's pretty good, whether you're looking in the short term or the long term, but rates are still quite high. Slightly elevated relative to what we now know the Fed funds rate is, 4.25 to 4.5. So that's what you got there. Crude oil moving a bit lower here. A lot of news, actually, in the crude oil space. We'll cover some of that here in just a minute. Just wanted to point out that that was down, a little bit, another 1%. That's a pretty nice little pullback there. And we've got some of those trades in our office trade segment. And then gold happened to make a new high here today. Just want to point that out in case you're looking. Another one didn't make a new high, but another interesting one was Bitcoin. If you're following along with that, $104. By the way, those of you that think, oh, I know what I'll do. I will participate in MicroStrategy because I want to participate in Bitcoin. Yeah, that's the trick. I'm saving some money here. You know that if you buy MicroStrategy where it's valued at right now, you are paying 80% more the price of Bitcoin than you are just buying Bitcoin yourself. So I'm not saying like go buy it and that, it's going to be magic and all that. But if that's the case and that's what you're thinking, why? Why are you messing with MicroStrategy? And their new ticker symbol they've got coming out, you see that's just a trick. They're doing it to dilute the shares. Look at what that ticker symbol, STRK or whatever it's called. They're doing it so that you'll convert more shares over to MicroStrategy, which will what? Dilute the total ownership of MicroStrategy. And you're going to end up paying more for your Bitcoin proxy than you would if you just go buy a fraction of Bitcoin anyway. So if you're not familiar with that, we won't harp on it. But gosh, take a minute. Look and see what they're doing over there. They are just trying everything. They're doing a good job at it. I'm not like bummed out. Not MicroStrategy, Microsoft. They're doing a good job at diluting the devil out of you guys, but whatever. Microsoft. So that's going to be earnings after hours. I think all of these were down, at least to start. So Meta, where's that trading at? 6. Yeah, down a little bit. Tesla actually down, $11, $12, something like that. So slight down moves on all these. Nothing crazy. Remember, 3 years ago, the fourth quarter earnings for Tesla, the stock was down $100. Right, so that kind of wild moves are out of the way there. Other stocks in the news we'll talk about here today. ASML. I'm going to point out some stocks for interesting reasons, right? Because we could go through a billion different earnings that came out today. Remember, 33% of the S&P is reporting this week, and most of the market cap is reporting this week. So there's a lot of names. Let's focus on what's interesting. Do you know what ASML does? So these guys really... It's kind of a monopoly, to be honest, basically a monopoly, almost perfectly a monopoly. They make the machines that make the chips, right? So like you're like, oh my God, these chips, they're going out like crazy. Yeah, but they make the machines that do it, and they're the number one people out there. So when we look at their earnings, that gives us an insight into how's the chip market, right? They go through these cycles where there's oversupply and then undersupply, and these guys are helping make the machines to make that happen. So we use it as kind of a proxy to go, well, what do we need to know? Like, I mean, do we have a series of months and quarters that are going to produce oversupply, or what's going to happen? Well, look at ASML. So what we're looking at is their total orders and then their total profit margin. Well, we're interested in what's happening here, right? Total orders very much higher, right? More than doubled, and profit margins are going higher. So the chip space very much still healthy, considering these guys make the machines that make it happen. And it's a way to look at it that's just different than saying, oh, they beat by earnings by so much, or blah, 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 whatever. Up 4.25% today, and you go, okay, what does that do for me? Tell me how I learned from that. And there you go. So you got a little lesson there. Okay. Let's try this. T-Mobile. Slight delay. Come on now. Hit me. T-Mobile. T-Mobile U. Oh. TMUS. There you go. So obviously this one moved higher here today. They all did well. Your AT&T, Verizon all did well there. New subscribers were 20% better than expected. And what's interesting with these guys and AT&T and Verizon, the things that we like to look at, is the total churn. You got a client, somebody joined, got your cell phone, you're making your payments. 2 months later, you switch over to AT&T, right? Customer churn, just like in any other business. Churn was lower than expected as well. All in all, a really good report for them. Yeah, not really complaining there. If we go over to Hess, oh my gosh, what a weird one. Why would we talk about Hess? We're going to talk about the Hess trucks or something here? Well, this is the 17th quarter in a row that they've beat on earnings. And everybody's looking at these producers now, especially since Trump took office, because we want to see if their total spending towards drilling and operations and everything is going up now that they feel like they can drill, baby, drill, all that stuff, or are they still hesitant, right? And what we're finding is more of these producers are saying, hey, we're willing to not give so much money to shareholders now and go reproduce and like actually make more and more and more oil and gas, etc. So, well, what does that mean? If we have more drilling expenditures, which for Hess we do, right? We've got production expanding here, especially in that last quarter they just literally reported there. As a percentage of their total cash flow, they are spending more. Oh, okay. So they saw President Trump, maybe taking office and everything. And they said, okay, let's get back out there and start drilling more. Why do we want to know that? If they're all doing that, Chevron and ExxonMobil and all that, why do we want to know? Well, if they're producing more, is that a bullish move for oil or is it bearish, right? If there's more supply coming to the market and there's more production happening, it could be what you call a headwind for oil. So a lot of that kind of goes into what you've seen in the price of oil where, oh, hey, maybe it's not worth $80 a barrel because more and more people are coming back online in a more serious way. Okay, that probably lowers the price of oil. I think $68 is where the oil industry's break even is, so still a little room there until they start crying wolf, but for the moment they say, hey, we'll make a couple bucks on this, and we know there's not probably going to be a lot of regulation that gets in our way. So a little lesson on that one as well. And I just thought that'd be kind of fun to point out some different earnings. There's a ton of other earnings that came out today. Moderna was actually downgraded. That wasn't earnings. The NASDAQ, Starbucks from yesterday, T-Mobile we already talked about, General Dynamics, Owen Corning's, right? A little bit of an issue there with some AI stuff that they had going on. Oh my God. Chili's. You guys are going to Chili's so much. Did you see this? So this is Brinker International as soon as it comes up. And what these guys do is have a series of name brand restaurants, Chili's being the one that stole the show this time. T. No? All right, we need new batteries or something. So anyways, Chili's kills it. So the stock makes new record highs, like all-time record highs for them. And it's because of Chili's. What are you doing? Everybody's going out and having some Chili's there. So those are your stocks in the news. All right, let's do something we call it our investor spotlight, something that you can learn as an investor that maybe you didn't know before. And I'm going to talk about covered calls today. They say, oh, you can't beat the stock market. Well, yeah, maybe just trying to buy something better than the S&P. You have your years where you do and your years where you don't. But you can technically beat the S&P, and it is quite common, actually, and that's from the use of selling covered calls. It is a sort of riskless strategy that you can use there, especially if you have a lot of shares built up in an individual position, and you're more than comfortable just saying, hey, if I have to get out of some of them, I'm more than happy to get out of them. Well, here you go. Going back to 1996, we track a couple different things. And we've done this before, shared this with you. This is just an updated version. In the light blue, you see the S&P, and that's total return, meaning dividends included and reinvested since 1996, the start of 1996. And we said, okay, let's take the same exact thing and compare it to selling covered calls. But we just want to sell 10% out of the money. We don't want to guess where it's going to go. We want something repetitious that we can model and see back how much would it have participated. So then we index it to 100 and we say, well, what is the growth of $100 if you'd have done that? Well, since then you'd be up 1,075. Well, the $100 would be worth 1,075 in the S&P 500, and it'd be up 1,541 by just selling 10% out of the money calls 1 month into the future. Now, obviously, we could break this down a lot further, and we're going to because I have that here with you. Okay. Here is the current outperformance of selling calls versus selling puts. And this varies, by the way. This is not like a written in stone kind of a thing. It's based on which way the market's going. You'll notice that in December, selling calls and puts outperformed the market by 20 to 40 basis points, right? That adds up. I mean, it's not making you rich overnight, but that adds up to accelerated returns. Well, in January so far, where we stand is that selling those puts have outperformed the S&P by just about 20 basis points. Selling calls did not quite do that, and that's because of the rapid rise that we had after that December decline there. So a lot of calls experienced the most of their value that they're going to get, and you were called away and you didn't get to participate in any future growth there. So the moral of the story is selling these covered calls, not a bad idea if you're comfortable with it. And I'm going to throw one more little thing in here. Think about this. The stock market is currently, if we just look back 2 years, the stock market is outpacing what it normally does. So in orange here, you can see this is the actual market's return. Then we take the median return for any 2-year period going back to 1928. So the life of the stock market, median 2-year return is over here. And you got the top quartile and the top decile, just the top 10%, bottom 10%, et cetera. And we're way outpacing that. So isn't this kind of an environment where maybe that covered call positioning might be at least worthwhile, help reduce your cost basis a little bit, maybe start to wind out of some positions that have done really well? I don't know what you have, and I'm certainly not suggesting anything, but just something cool to look at. And I want to give you an update on that because, well, we do those things from time to time. Let's see if this is actually going to do it. Oh, we got a little power in here. Let's see. Trader time. So this is a segment we do where we review some of the things we did in our office trades. It's something you could participate in separate from this. jazzwealth.com/research. It is $13 a month. You can stop and start and do whatever you want. But we basically show you, we show you the trades in as they happen, whether they're good or bad, the position sizing, the P&L, and all that good stuff. Well, today, we only did a few things, actually. After the Fed announcement, when we had that first sell-off, what do I always tell you guys? If you've been watching for a while, it does the same thing every time. There's always the initial move, the retracement, and then a lot of blah. You don't know, just whatever happens. So on that initial move that went lower, I bought the SPY just under $600 and sold the 0 DTE calls that have expired. Sold them for $2, and, well, it closed above $600, so that's a profitable play and will be called away. Carrier Global took a bullish position on this one, using options to bet on either up or sideways there. I think you know what I'm talking about. Freeport McMoran, same thing. This one a little longer duration because of this longer downtrend here. The downtrend did get a little bit accelerated and just, hey, look what happened last time. You're in a downtrend. It started to accelerate. What did it do? It bounced. We're saying, hey, it's accelerating. Maybe there's more to go, but we're looking for a bounce on that one. Really, really simple. And then 2 trades that came off that were one-day trades. 50% profit on both of them was this VST, which was not my idea, and VRT. They both rallied today enough to take out some of the volatility from those stocks and also give us a healthy profit in just one day. Coming up in the office trades video, we're going to do the opportune time to take a profit based on where you stand. So using all the data that we have, we're going to go, hey, if you have this percentage profit on this day, you take it no matter what it is. If you have this, so on and so on, so that you have a more, manual way, or what do you call it, like an automated way to go about it. All right, let's talk about something you learned here first. And this is going to be fun. All right. So there was a 97.2% chance that the Fed was not going to cut rates today. They did not cut rates. Okay, fine. Where do we go from here? So instead of looking at that, if you ever look at the FOMC probabilities, it's like okay, it's kind of a tough thing to look at. We color coded it. We basically made a heat map to show you what's going on here. So today, I'm sorry, I said it wrong. 97.9% chance that today they were not going to cut rates. There was a 2% chance that they were. There was no chance that anything else was going to happen today. At least that's what people were betting on. All right, so as of now, and this will change, but as of now, the probability is that in March, that's the next time they meet. Remember, we got a long time now before they meet again. 66.5%, 32%. Guaranteed that changes, but that's where we stand. Going out till May, it's about a 50-50 shot. And you can see how as the year progresses, we're waiting on later in the year for that to start changing into, there's greater chance that they'll cut rates in September or October to do one more of those. So that's kind of a visual way to see that. And we'll keep this updated. So we'll keep, as the rates or as the probabilities change, we'll keep coming back to it because a lot of people like to keep up with what to expect there. Now, how did Mr. Jerome Powell do today? You know that he's not had the best of runs, meaning when he makes the decision or when he announces the decision, the market tends to do basically the same thing every time since he started. Well, I want to compare how he did today, and we're going to talk about a few different areas here. So first, let's look at how he did by event. All right. So we are in a what we call a loosening cycle, right? So here's the intraday performance of the market in any scenario. That's the orange in there. In any scenario where rates were loosened, right? And we see basically you got nothing happens. In any case, nothing really happens during the day. Just like today, not much really happened, although we did start negative. And then all of a sudden, a Fed meeting or Fed announcement comes out, Fed meeting starts, and you get all your action. When a loosening cycle, that's actually the weakest. He broke that trend today. Actually, the market did try to rally. If we look at tightening, anytime we're tightening monetary policy, okay, we got a little positive move there from the meeting off, and it fades into the end of the day. In every case, it does fade into the end of the day. Oh, well, just for fun, we'll use the, I typed it wrong. We'll use the SPY so that you can see this here. We'll go on over here, and I'm just going to change it to, where's the mouse? There we go. I'm going to change it to like, 5 minutes, let's just see. We look at a 5-minute period, we faded off, right, through the Fed meeting, and then we had a rally towards the end of the day. So a little bit different there. He gets a little credit for that one. Now, let's look at something else here. Now, this is not Jerome Powell. This is every Fed president since 1994 when they started actually doing the announcement this way. Let's look at the first meeting after every presidential inauguration, because that's what this was today. It was the first meeting since President Trump was elected. Do we see anything different? Oh, yeah, much different. Again, not much during the day, kind of quiet. Fed announcement, Fed meeting starts. What do we have? A sell-off and a rally into the close. Not always positive. What do we have today? A sell-off and a rally into the close. So there's a pattern here. People follow this, and obviously the algorithms are tuned into it and know what's going on because we keep seeing the same thing happen again. And I'm sorry, that was a 1-minute chart, not a 5-minute chart. So I thought that'd be cool to take a look and see how's he doing, because he hasn't had the best string. Usually when he talks, that market starts selling off on Fed days. I just thought that was kind of interesting. All right, let's see what else we got here. That's pretty much it. So the earnings tomorrow, you got Baxter, Caterpillar, Dow, L3 Harris, MasterCard, Altria. Oh, Altria is coming up. Northrop Grumman, Pulte Homes, Sherwin-Williams. And then after the close, UPS. And then after the close, you get Apple, Intel, and Visa. And I hope Visa responds negatively to that. No other key events that come out tomorrow, so that is that. If you have any questions, feel free to ask them. I will stick around for a minute and answer questions. Other than that, you had a couple downgrades today, or a couple upgrades. Coinbase got upgraded today, and then Moderna got downgraded by Goldman Sachs. Yeah. Actually, well, I mean, natural gas tomorrow or whatever, but that's what you got. Really cool. And remember, February 3rd, we will be moving this show to the new channel. It's the Closing Beat channel. It's on the screen right now, so you can, or was on the screen, so you can see what's going on there. And we'll be moving over to that channel. Please go subscribe and join us over there. Yeah. And maybe, like, you don't have to do it forever, but if you hit the little bell, like subscribe and hit the bell button. Maybe that'll just remind you that we moved over there. And then if it gets annoying, you can turn it off, but that's it. All right, let's see what questions you have, and then, find out something fun to do today. Tom says, hey, Dustin, opinion on Micron. Sold off hard with NVIDIA, but did not bounce with it. Low PE and made in America, so Trump chip tariff won't hit them. Think it is overdone. Okay, all that's very, very well thought out. I have no issues with that. Just a little bit. My issue here is we are moving towards the low end of the range. And I don't know how you're going to play this or believe that, you play it. It sounds like you're bullish. I would just wait for a little bit more. You know what I mean? With the market sort of teetering here and having these up and down days, you're right to say, well, look, NVIDIA sold off again today, and this guy's kind of holding tight. We have one down day in the market. Could you get it a little closer down there just to be real picky on price? Now, if you are saying, I think this is overdone, and I'm a 1 year, 2 year investor, now I'm talking like half position. Maybe you just start inch into it as you hopefully come down towards these lows, and maybe even just break through a little bit would be ideal. Maybe you build the position instead of doing that. If you're an options trader, obviously you're trying to get your break even below those lows. I think that'd be the play there anyways, but yeah. Fred says, how do you join this $12? Well, unfortunately, Fred, it's $13, and I don't know how he came up with that, to be honest, but it's $13, jazzwealth.com/research. And I think if you go to our website, it is up at the top. All proceeds go to Drum Corps International. So we don't try to pocket the $13 and go to Chipotle or whatever. It goes to Drum Corps International. Yeah. Hey, has there ever been a more reactionary stock than NVIDIA? Too many hobby and yeah, of course there has been. Think of MicroStrategy. We just pointed out. Think of AMD back in the COVID days, GameStop, right? Things like that. Go back even further to the 3D printing stocks, the plant-based meat stocks. Where'd they go, by the way? Yeah, there definitely has been. 1 day moves like that for NVIDIA. I think I looked it up. By the way, on the research site, you get all the tools that we use to find all this data. I use that to look up and see how often does NVIDIA fall more than 15% in 1 day. Yeah, you don't get very many. So it's not as common for NVIDIA, and hopefully for investors, it's not that common ever again. Financial Wisdom says, thoughts on Alibaba? Yeah, it's had a great couple days. Actually, there's a lot of Chinese stocks that are outperforming right now. Pinduoduo. Need to order some batteries from maybe Alibaba or something. Come on, you can do it. But that's one of the outperformers, and you see it on the chart there. But a handful of stocks, from their education companies to their online streaming platforms, IQE, a lot of names doing well over there. And China has, in the really short term, I'm talking days here, has been an outperformer. I worry, though, right? I don't like to chase things that have done things like this. I tend to be a contrarian. But, yeah, that's what you got. I love it. Sweet. We are in the process of remodeling the entire studio, and as more of it comes, we will share more of it with you. But, just playing with some things out there, trying to make things a little fresh and new again. And that might be the end of these batteries. No, it's just kind of tinker. Maybe there's like a signal issue there or something. Fast Eddie says, Pep. Probably talking Pepsi, the stock, I would imagine. What are your thoughts? What's going on? You want me to just ramble about it? From a technical perspective, people like the idea that obviously it's broken through that downtrend. You got earnings coming up. However, Pepsi's not one that is a big mover on earnings, just so you know. You could actually use the research site to look that up as well if you're curious. But I just know from Coke, Pepsi, Verizon, you typically don't see big moves out of those guys. It's cool that it broke the downtrend, though. You might look for the old Jazz Wealth pattern. Mm-hmm. Studio looks warm. It is a little warm, if I'm honest with you. Yeah, it's a little bit warm. All right, cool. We'll wrap it up there. I hope you have a great rest of your day or evening. Tomorrow's another day to see what happens there. We'll be back, and thanks for watching. See you.